out to Maverick Currencies midweek update for July 20th, 2022. Corey here with you. We always start these with a reminder to make sure that you follow your trading plan. Investing and trading in general involves risk, and we're going to talk about some of the risk, reward, setups, probabilities, all of those things as we do a review of this, how this week is gone. So we met a week ago, as always, on these Wednesdays, and I look at the market, and there's a lot of reasons to be nervous, but as I've said before, those are knowns, and so you always have to think about, when something has been known for multiple months, and name the details. Russia, Ukraine, okay, that's when it first came out, okay, it wasn't priced into the markets. I get it. It was an unknown, right? Nobody had as their outlook for 2022 that Russia was going to invade Ukraine. That was a risk that popped up on the markets that was not there. Inflation, nobody realized that, or most didn't expect it to be as high as it's gone, for the Fed to raise rates that much. In fact, the rate hike expectations have exploded higher. They started this year very low and they've exploded higher. So, but my point is that these risks, they're known and they have been known for quite a long time. If these were new risks that just popped up this week, of course, it would have to play out for multiple weeks and get priced into assets and so on. But because the market has been digesting that, as I was speaking about this last week and for the past couple of weeks, these are known factors, and because they're knowns and because they've been priced in, now we've got to think about the other side of that. We've got to say, okay, at what point are all these things priced in? And you can see the extreme pessimism in the markets. Consumer confidence numbers are at multi-decade lows. That doesn't happen very often. And of course it doesn't. It hasn't in 50 years, right? The consumer feels horrible. We talked about, it's counterintuitive, but the CPI headline last week was probably kind of an extreme sentiment move. And so a lot of these things were factored in, and this is very much how markets work. They were going down, 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 pricing in these negatives, and now the data is still coming out very negative, but what are you seeing in price action? Price action has been going up. The data and the sentiment continues to go down, and it's this that matters most. When you get good price action in what should be, could be, would be a bad market, that's a market tell. And that's kind of where we're at on this. We said this last week. We've likely moved into a risk on market, that the US dollar has hit an exhaustion high. Those things are accurate. That's what's happening over the past week. If you look at a US dollar chart, we'll look at one here in a minute, it's really fallen off after what was a great run. We talked about Euro USD trading to parity and all these things. I didn't think it would get there so quickly. I didn't think it would happen in a matter of days. I thought it would take a couple of weeks. But either way, after that happened and after we pierced that level, it kind of had to go through it. Euro USD didn't just stop right at 1 at parity. It had to go to 99.40 or whatever it was. It kind of had to trigger those stop losses, create that, that twisting of the arm, push people off the ledge, you really get people out of that trade. And now it's kind of reversing. And that's what the US dollar is doing. I still think this has some legs in the short term. Now, there's always the possibility that a new unknown hits the markets that is major, that is impactful, that has to be priced into assets for multiple weeks and so on. It's possible that looms, but right now we're not getting that. You look at the Fed meeting that's coming up, there's going to be nervousness going into that, of course, but the Fed hiking by 75 basis points, these things are somewhat factored in. So I think we're still a little bit more on the risk on side of it. Most commodities have turned over. I talked about being interested in energy much more than gold. They're just different charts. If you look at them long term, energy, you can still very much make an argument is in a bull market. Even though it's come off sharply, if you look at a long-term chart, it's up, and it wouldn't take too much for it to move to new highs. Gold, on the other hand, had been trending up earlier this year and has certainly broken down much more than it really should have if it's still in this long-term bull market. So I'm not saying that it can't go up, but it's going to be a lot harder road, and I'd much rather play the energy space. In fact, natural gas, when comparing oil and natural gas is stronger than oil. There is an energy crisis in Europe. There's going to be exporting of natural gas and commodities and things there. There's talk about all sorts of things that they're going to have to do. I mean, they're going to put limitations. They're going to turn off street lights. They're going to do all sorts of things because they're just not going to be supplied with enough. Bitcoin, cryptocurrencies in general, we touched on this last week that it was probably time. Again, as I said, Bitcoin is not an inflation hedge. It has not proven to be that at all. It is a risk asset. And when you go risk on, you want to be an owner of Bitcoin, and you could even go out more dangerously on the scale and go into some of the other cryptos that will have bigger bang for your buck. That's worked, but again, I'm going to put Bitcoin even worse than gold. I'm going to put it in the camp of this has been a hellacious downturn, and now we're seeing a sharp correction. These things happen in bear markets. I don't think Bitcoin's out of the woods yet. We're still in a bear market, even with this bounce. Odds favor even lower prices, to be quite honest, and probably favor, by the way, they probably favor the S&P going lower before this is all said and done, the US dollar going higher before it's all said and done. But as traders, we're trying to profit from a variety of different opportunities that the market gives us. Last week, I felt like was an opportunity towards risk on. This week, it's not as good. I mean, we've already moved somewhat in most of these assets. I think there's a little more to go, but I guess I would put the emphasis on a little bit more to go. I'm not sure that the markets are really out of the woods yet. If I had my crystal ball, which I don't have, I wish I owned one, but what I would think, this is my best guess as to kind of the future. And I don't like to make, too big of predictions long term because it's hard to get really big picture stuff right on. But, I would kind of think that the S&P will ultimately roll over, that Bitcoin will ultimately roll over. But if you want to know what holds up well, I still think it's the energy patch. If you're looking for places to hide out, I still suspect that that's a better area. And that should lend itself towards, commodity currencies can hold up relatively well potentially. But it depends on whether they have the energy exposure or not. I don't know that, copper and steel, I'm not really bullish on them. It's more about the energy commodities, oil, nat gas, anything energy related would be more of where I would think can hold up well. CPI data out in the UK, a little hotter than expected, but in Canada, a little lower. Now, in the UK, it's a year-over-year number. They're experiencing 9% annualized inflation, pretty close to what we have here in the US. Canada, similarly, but theirs is a month-over-month basis, 0.7, a little lower than anticipated, which markets want to see, certainly want to see inflation numbers backing up. So as we look at this week's performance, you're seeing the rotation. You're seeing money come out of defensive and into the risk on. Certainly, cryptos have had a big bounce back. This is their best week in many, many, many weeks. And for the week, I mean, everything's positive with basically gold flat. So as we look at these, individually, let's start with the S&P chart. We've now broken out above the 50-period moving average. And so there's two thoughts. Do you just run away? And this is it. This is the bottom. We've hit the bottom. The bull market reemerges, and away we go. And all is rosy. I don't think so, personally. But I do think what tends to happen here is you can start to make a little bit of a measured move. You can say, okay, about how far extended below the 50 were we? That's probably about how far you can extend above it. And I think that's exactly what this is basically a bearish to bullish reversal in the short term that has probably some decent follow through. But by about the time that everyone says, oh, everything's good and everybody gets happy and the markets are back and we're headed to new high, everybody gets bullish again, which will probably be up here in the neighborhood of 4,200 or so, is probably the end of this run, and we head back down, and do we break those lows? Do we go into, I don't know how it goes, but that's my expectation, is that there should be more upside, that we should, not necessarily today and into tomorrow, but I mean, in the coming weeks, we should extend through this 50-period MA. We'll probably make a range that's, roughly the size of this one. So just eyeballing it, it's probably about 250 points. So as you break out above this 3,900 level, you probably get up there towards 4,200-ish. Again, that's a pretty good move. I mean, it's a couple hundred more points in the S&P is kind of how I see it. And a couple hundred points on a $4,000 asset index here, just in terms of percentages, that's still another 5%. So, not insignificant, and probably take a couple of weeks to fully develop. But after that, I don't think I would be terribly optimistic on markets. Here's a long-term chart of the US dollar index. We've now cleared this hurdle, but here's the thing about support and resistance. A lot of people think, and I kind of thought this way years and years and years ago. And when I first started learning about support and resistance, I thought it was like, almost like it was cement, or it was like this strong level, this foundation that you just couldn't pierce. And I thought it had to be precise, and you had to, have this line that was perfect, and it shouldn't even go through there for minutes, let alone days or, whatever. And I learned years ago, and I always teach it this way, that it's more like a cushion. It's more like a mattress. What oftentimes happens is you'll come back and you'll sink in a little bit and then go, right? You'll sink into old resistance as new support. You'll come back and retest, and that's perfectly fine. That's perfectly okay. So did I care that this peak right here, that we sunk back in? See how we pierced and kind of sunk into that, and then off we went? That's actually very natural. And if you understand how markets work to kind of frustrate and upset the most amount of people possible, right? It's, we call it max pain and those sorts of theories of, the market, it basically tries to generate, activity and trigger stop loss, do whatever it can to kind of shake people out of their positions and those sorts of things. And that's what sinking into support or sinking into resistance. So I don't use it like it's some rigid number. And the reason I bring this up is I expect the US dollar is now on a downward trajectory. The long term is still a very strong bull market, no question. But we have been on an enormous run, which all led to parity in Euro USD, to this extreme move, It was kind of a parabolic move. We've basically been moving up for a year straight. I mean, you could go back to April or May of 2021, and the US dollar is just, it's not up every day, every week, every month, but it's up overall, and just strongly so. So I think that we're going to continue down for the foreseeable future. Again, not in a straight line, but this is my expectation. All the way back to kind of sink into this support, and ultimately that will likely be a tremendous buying opportunity. But the way I look at it right now, as much as I love the US dollar previously, and we talked about this bull market breakout and so on, it's a risk to reward thing. I think even if it's strong here, it's sideways. I mean, the best case scenario for the US dollar is that it's sideways for a while, but I don't suspect that. I think we come down, I think we sink into that level over the next couple of weeks, which would really correlate well. It's part of what's been holding markets back, international markets, commodities, and so on. And those have gone to extreme numbers. I mean, you're seeing many commodities off 50% plus. That's a huge move. That needs a correction. And it wouldn't do much. I mean, who cares if the US dollar comes down from 106.50 to 103.50? Does that really do much of anything? Well, it's a pretty big percentage move. It's hundreds of pips in US dollar, but in the grand scheme of things, it's not that big a deal. And I think that's what happens over the next couple of weeks. That's how I see it. So I continue to stick with the same outlook for me that I liked last week. I'm a buyer of the commodity currencies. I want to play risk on, USD on the short side. Swiss franc probably should be a short. Japanese yen, I'm a little nervous about the Bank of Japan and some of those things, but them as well. You have to understand what's happening in these countries is kind of interesting. We've gone from the US really being hawkish, which means they're the Fed raising rates and so on. But it's interesting. All of these other countries, see, US dollars have this they play a huge role in the markets, right? Much of debt is priced in US dollars. Commodities are priced in US, all of these things. And the US dollar's been on this huge run higher. That can be really, really negative for these other countries and the companies that operate in those countries, and so forth. And so it's interesting because what we're starting to see, Bank of Canada raised by a full percentage point, not 75 basis points as was expected, by a full percentage point. Why? Because now these countries are somewhat hawkish and trying to outdo each other and trying to strengthen their currency a little bit and trying to not have too much of a currency problem. And I think we've gone from, around the world, it was kind of a contest to see which central bank could be the most dovish and cut rates and stimulate their economies and so on. Now that's kind of flipped on its head. And it's interesting because most of these countries are now moving more aggressively hawkish, which should be good for their currencies. Should the CAD understand that they're raising rates by more than expected, that's strong for the currency as a general rule and so forth. I think that's what the next few weeks are about. And so that's some of what we're seeing. As we look at crypto, if you think risk on, then I think crypto has, again, a bit more to go for a couple of weeks. Ultimately, do I think it's going down again, that it's just up and away? I suspect it probably will go down, but for now it's a buy. For now it's a long trade in my view. So let's go look at a couple more things here. We looked at the US markets. You got to kind of upgrade things from last week. So this was green last week. Now we're green here. right? So we got to upgrade that a bit because now we're above the 20, we're above the 50, and you can even see that 20 crossing upwards. So from the standpoint of markets, seeing better price action. Now we were positive last week, but if we look at international markets right up to that resistance that we talked about, and this will be an important test for international markets. Do I think they go up and through? Yes, I do. I think there's a little more to this. Cryptocurrencies, we talked about this range. They were trading between 22,000 and 18,000 in Bitcoin. We have broken out of that. So initial targets, you could kind of do a measured move approach and say, okay, this isn't Bitcoin, this is all of the cryptos combined together, but it puts things in perspective where you kind of say, okay, that's about 800, so you break out about above 58, you probably get to 66, something like that. So we probably have made, most of the run in the short term, a little bit more, and then we can kind of chop around a little bit. I think they're, again, crypto can do okay in the short term. I wouldn't be chasing it by any means, but it tends to look like a buy the dip type of scenario. Let's look at a few other aspects of this market. So what's going to move markets the rest of this week? Well, Europe, the ECB, it'll be interesting to see that expectations are for a 25 basis point rate hike. Are they going to move much more hawkish? They're in a, if of all the countries that's kind of right there, most negatively impacted by Russia, Ukraine, and all of those things. I mean, it's Europe, it's Germany, they have a pipeline and all these things that they've built out with Russia, and it's just a big issue. Now, there was is it Gazprom that shut down their energy supply and so forth to Europe. I mean, there's just some real issues, and they've got to work those out. But can they be super hawkish? They might be the one country that can't be quite as aggressive as others. There will be a press conference after the announcement. So the announcement will come out at 8:15 a.m. Eastern Time, 8:15, and then the press conference at 8:45 a.m. Eastern Time. On Friday, some manufacturing and services PMI out of Europe, so out of Germany, out of the UK, and even here in the US, we get some of that data as well. So looking at PMI numbers, anything above 50 is still growth. All of these are expected to print above 50, but in the low 50s. Not much growth, not much growth, not much, very little growth. Still not recessionary numbers, but not as strong as perhaps markets would like to see. So let's go look at some charts here together. Okay, so let's look at a few charts here. This is US dollar, and this is US dollar against all of the other currencies as kind of a grouping. My mind, again, you kind of had this exhaustion high and we've fallen off. This won't be a straight line to the downside in all likelihood, but I do think there's more corrective phase here. What I would love to see is maybe a 1 or 2 day rally. Nothing that's going to go to new highs, but you get a little bit of a bounce, just very tepid bounce. And I think I want to short into that on the daily chart. If we turn to shorter time frames, you'll kind of see a little bit of the essence of what I'm thinking here. This is the 12-hour chart. Again, maybe a bounce up underneath that 20 period moving average. Just a minor bounce. I mean, nothing major, but this is kind of bullish, bullish, bullish. And now we could start to establish a lower high, lower lows, and so forth. And I would anticipate that that's exactly what's going to materialize. Go to the 4-hour chart and you'll see a little bit more of a reversal. But now I would love to maybe get a Bollinger Band short setup or something like that. A little bit more push up in. You see this breakdown zone, this kind of area. If you came up, and it Doesn't have to stop right there, just kind of bounces into that zone and then rolls over. That's what I'm envisioning. So this US dollar, I mean, it really looks like, in my view, I think there's more to go. On the 1 hour chart, we've bounced a bit. I would suspect there's a little bit more, and then ultimately it fails and turns back over. Let's look at a couple of currency pairs to keep this in mind. So I see a request for a couple of US dollar charts. I wanted to look at the same. Here's Euro USD. Not actually my favorite, out of all of them to trade, but I'm okay with it. I think it's hard for the euro to rally with so much going on in Europe. That's my bigger issue. But do I think it'll do okay? Do I think that we'll maybe come down and then push back up and so on? Yeah, I mean, I tend to think that, but I would rather, personal preference, let's go look at a couple of these other. Where are my US dollar charts? Am I just blind to them? Oh, there they are. Okay, so here's USD CAD. Now this is the daily chart. You can see the drop. What I would expect, what I'm kind of anticipating, and by the way, from failed moves come fast moves. Look at that failed breakout, in essence, turned right back below it. I'd love to see a little bounce. It probably won't even get up towards that line, but a little bounce that I would like to short into. That's on the daily chart. Again, coming into, maybe a 12-hour, you can see that bounce up underneath the moving average. 4-hour, we're extended, a little bit more bounce up into this zone, and this is kind of where I suspect. I don't care if it kind of comes up into that, squishy like comes a little above it or whatever, squishy like a mattress. But that's the area. Call it 129.50-ish here in dollar CAD. Something like that is kind of what I envision. And most of these charts look pretty similar that way. We may not even need to necessarily go through all of them. But let's look at, here's Kiwi versus the US dollar. Again, working our way in. So daily chart, you're seeing Kiwi bouncing versus the USD. I think we get a little sell-off, and that's ultimately a buy for the next push higher. Okay, daily chart, we've had a bounce, but I think we start to correct. 12-hour chart, again, probably pull back, and that's the buy. And 4-hour chart, we've extended upward, a little bit deeper pullback, and you can kind of see the areas that it can sink into. The 4-hour chart really kind of pinpoints where I'm looking and what I'm thinking, which is kind of in that 61.90 area, somewhere around there. It's not a huge drop, but a good risk to reward for this, as I see it. What about the CAD against the yen? Okay, so that changes things up a little bit, and this is more a question of, as long as you feel okay being short the yen, which it's not I just don't know what the Bank of Japan's thinking, and if they turn hawkish at all, that thing is dried out wood that could just catch fire in a hurry. I mean, it's perhaps a low probability, but it's a probability that has a lot of risk to it. So anyway, I think you can kind of do the same thing trading it against the US dollar. But if you really want to trade it against the yen, I mean, I don't see any problems technically. On the daily chart, we're still breaking out. Should continue to work our way higher. On these shorter time frames, you can see the trend persists. We went through a correction back here, rallied back up out of it. 4-hour chart, steady as she goes. You might be looking at it from the perspective of, okay, we've been trending higher, but maybe I start to look at the trend line for an entry. Maybe I start looking at some of these levels that, maybe give me a little bit better risk to reward or something along those lines. If we kind of drag a trend line up here, and get that exactly where we want it. Draw it something like that. That to me is kind of the trend line here in CAD versus yen, CAD yen pair. So maybe there is a little bit more correction that can come back and you can get long in that area. Good stuff. Euro Kiwi saw sneak in here. So let's go back to the daily chart to start. Euro, I'm okay with Euro short along with, like we talked about, you could short the Euro against the Kiwi, against the CAD, against the Aussie. I think it should underperform. The bigger issue I guess I have is that Euro has been so weak, but it maybe hasn't fully priced that in yet, and I'm kind of on board with that. So if you go Euro Kiwi, we're recently breaking down, right? This area, this range, it seems to be breaking to the downside. That's the longer term daily chart. And you'll see it, I mean, if we're starting to break down and making new lows, if you go into these other time frames, you'll see the corrections and the rollover. The 4-hour chart, and we're rolling over. The 1-hour chart, and we're downward trending and such. So I'm okay with that. Euro Kiwi, Euro CAD, Euro Aussie. It wasn't right at the top of my mind in terms of where to focus, but kind of makes sense for a variety of different reasons. I also think, just generally kind of speaking to central bankers, can the CAD raise by a full percent? Yes. Can Europe raise by a full percent? Heck no. They're raising by 25 basis points. The US is raising by 75. It's a different world, and Europe and Japan as well. I mean, whether Japan needs to or not, look, Japan's inflation, as it's reported there, is like 2 point something percent, 3%, whatever it was. It's not out of this world. So now that can change in a hurry, as we saw here in the US, but right now Japan has been slow to move and Europe has been forced to be slow to move. I think in an alternative universe where Ukraine and Russia and energy and all these problems weren't happening, which are negatively affecting Europe and their economy, they'd be raising by 50 basis points, 75 basis points, but they just don't have the economic cover to do that. So yeah, it's a tough spot, and I think it makes sense. I mean, here's Euro Kiwi on the 1 hour. To me, it looks like an inverse cup and handle, and this thing should continue to the downside. So yeah, I like it. Aussie Swiss franc and Kiwi Swiss franc. Okay, so let's go Aussie first. Coming into the daily, Aussie is correcting right now, and you can see this short-term correction, so a little bit of a trend reversal that started to play out. I know from experience this one's going to make me a little nervous on the daily chart. I'll show you why here in a second. I'm guessing Kiwi Swiss franc looks similar. Let's glance at it. Sure enough, pretty similar daily chart. This is what we call a deep correction, but what's the problem? You're still below the 50 MA, okay? So when you start correcting up like this, but you're still below the 50 MA, you're probably hitting an upper Bollinger Band. You're probably starting to get to a longer term short setup. What were we looking at first? Aussie, Swiss franc. You see it? The Bollinger Band concept is if you're hitting the upper Bollinger Band and below the 50 MA, that's a hard setup to get to, right? Most of the time, you won't hit the upper band. Most of the time, you'll hit the upper band when you're in an uptrend. See this? We call it riding the band higher and higher and higher, and it speaks to strength. You rarely get to the upper band and are still in a downtrend, and that combo is not great. So yeah, I think I would avoid these. I think I would prefer the other charts that we were looking at personally. In the short term, on this daily chart, it's just likely to have some sort of give back. Maybe it can work its way through it and reverse trend and so on, but it's a concept and it's a strategy that works enough times that I don't like to buy it when it's giving this big flashing sell signal. So for one reason or another, and it's probably, I mean, it really speaks to the Swiss franc more than anything, any problem with Aussie or Kiwi. It's not their problem. It's that the Swiss franc had this huge reversal in trend. And now we're hitting that upper band, meaning we've gotten overbought, but we're still in a downward trend. Those are more short setups. So yeah, I would prefer buying Kiwi against the euro, buying Kiwi against the USD, maybe against the yen even. You know, those charts look a little cleaner, and that has me nervous. Yeah, for more information, just go into Maverick Currencies and watch the Bollinger Band concept and video, and you'll see my strategy. I kind of lay it out, talk about the buy signal, the short signal. In this case, it's giving a short setup, saying that Kiwi and Aussie should be weak versus the Swiss franc in the coming days. And it's a good enough setup, good enough system that I bet it does. I bet the Swiss franc is poised maybe for a little bit of a rally here in the short term. Again, I don't think it's the Aussie and Kiwi that's the problem. I think it's the Swiss franc. So hope that was helpful. We've got a great calendar coming up. So we've got pivot points. Now I'm doing this recording. Maybe you feel like you're familiar with pivot points, but I can add a little bit more color. Maybe you understand that pivots are change in direction, but we're going to break it down even further. We're going to talk about the power of a pivot, how you can say, well, this is a P5 pivot, or this is a P10 pivot. And you can actually classify them. You can identify whether it's a minor, intermediate, major, and how to trade off of them. So it'll be kind of a fun class. We've got the ECB meeting live Thursday morning. Again, that's at 8:15 a.m. Eastern time. So we meet a little earlier than that. Well, I think it might be scheduled for 8:15. But anyway, check the schedule. Currency Room recording. And then next week, we'll have our midweek, but it'll be with the FOMC. So we'll actually trade the FOMC meeting. So a lot of good stuff upcoming. I have turned much more, risk on over the past couple of weeks. Like we've talked about, there's just some good things happening. I think sentiment got to extremes, and that's kind of how markets work. I think we had the negativity priced in, and so now we're seeing that reversal. And about the time, markets probably have another 3, 4, 5% up, like we talked about. Once they do that, everyone kind of breathes this sigh of relief and says, hey, we're in good shape now, and yada, yada, yada. Be ready, because there's probably another big leg and more volatility. I don't think the markets are out of the woods long term. I think this is tradable, and that's what we've tried to do. So hope you've enjoyed the midweek this week. Have a great rest of your week, and we will see you next time. Goodbye, everyone.